So let's just do a real quick rapid round fire of who we are, like our name, title, and who we're representing. Starting with you.
All right. Good afternoon, everyone. My name is Calvin Nachoti. I am the chairman of KEPFIC, Kenya Pension Fund Investment Consortium, and also a trustee on the Kenyatta National Hospital scheme. Thank you.
Good afternoon, everyone. My name is Lydia Muchiri. I'm the head of Custody and Investor Services business in Coop Bank. We are the leading trustee in that area. I had some talk about being bold and courageous. We took that leap of faith many years ago and established that business, and I've supported all REITs that have been in the market. And I can tell you stories, including the one that you're forgetting. There have been 5. We've been involved in all of them. So don't make any mistakes. We've paid the school fees. Thank you.
Oh, she's got stories. I love it.
Hi, everyone. My name is Matthew Maina. I'm the executive director of AIML, the REIT manager for the Econ REITs.
And Judd Murigi, head of research at ICEA on asset management. Sorry, Judd Murigi, head of research at ICEA on asset management.
All right, thank you so much. You know what, and I forgot that part about, I think that's the most important piece of this conversation today. It's like, let's get this momentum going. But I do want to start the first question. I'm going to throw it to you, Dan. And really, it's just kind of setting the tone. As we think about, we've been hearing all day with regards to the value that REITs actually do offer. And so with REITs offering investors the opportunity to invest in real estate without actually owning physical properties, can you share your thoughts on the advantages of this investment approach, particularly in the context of Kenya's real estate market?
Oh, sorry, the question is
he's not here. Where's Dan? Dan stood us up. Okay.
I can help him out.
Oh, there's Dan in that empty seat over there. Okay. So you put the mic to your mouth. You want to take that one? You said no. Does anyone want to talk about the opportunities to invest? All right.
Yes, I think I can do that.
Because you've been involved with many of them, so.
Yes, I think we can't overemphasize the importance of professional management and expertise. And you know, as you said, in the context of Kenyan context, you find that people like to do everything for themselves. But what REITs do is that they give you that professional expertise in the whole process, from acquisition, the level of due diligence that's done, including all the professionals, the valuers, the trustees' involvement for that fiduciary responsibility. You get that extra level of comfort. The other thing I would say is that you don't have property level hassles, because individually, my house in Athi River gives me enough headache when the tenant doesn't pay. So you can imagine also, as an investor, when you invest in REITs, someone else is taking care of collecting the rent, distressing the tenants if they are not paying, and all the things that come with managing a property, if it's maintenance and so on. The other thing I think I would say is the lower capital requirements. In the morning you had Abubakar speak of the lowering of the limits from 5 million to 100,000, but for the ones that would be in the main market, you are able to invest with as little money as you need to buy 100 units or shares. Then the others have been spoken about, the regular income stream and so on, and transparency. So REITs give you much better benefits than investing in physical property.
Yeah, I love that. And, you know, as I've come to learn and grow more along this REIT journey, and at least in the States, a lot of people are like, I want to be a real estate investor, I want to be a developer, I want to own real estate. And they don't think about all of the risks that really come with that and the responsibility that comes with that. And so REITs, you know, are such an amazing vehicle to be able to invest into physical assets without having that necessarily headache and burden of managing the day-to-day and worrying about the overhead and the cost and all of those things. And so if you can ride it out, the benefits and results are unbelievable. So I'm definitely a fan and a fanatic, not just because of my job, but because I'm seeing this in real life. So thanks for sharing that. Does anyone else have any other thoughts around that?
Yeah, I could go. I don't know how many of us are in any pension fund here. Hands up. What percentage is your pension fund invested in real property? I don't want Calvin to answer because I know where he is and he's probably struggling. So one of the challenges, when you look at the REITs themselves, I think what REITs give you as a long-term investor is your ability to match your long-dated liability with long-term assets. That's the first thing that it does, without the hassle of operating real property. I know we have some realtors here, and that's part of the business, but when you go and look at yields themselves in real property, trustees themselves, and even mom and pop real estate developers, they're not experts in managing those assets. So typically is, they will go and invest with gut, not with facts. And that is why when you look at REITs themselves, it allows you to be able to invest in unitized real estate for as low as 100,000 now. That Abu Bakr has done that, and well done RAK for lobbying for that. It's something that we need to recognize that. And that also just plays a significant role because for the longest time, I think for the last 60 years, we've institutionalized a lot of real estate at that fund level, but we've not been able to bring the retail person. So what REITs allow us to do is also now structurally through probably aggregated vehicles allow the retail investor as well to come in and understand how to invest in real estate without being a developer, without being an operator, without being a manager.
Yeah, I love that. And so while we're talking about investing, this sounds like a great opportunity to transition Calvin over to you officially. What factors, right, do you consider when evaluating the potential of a REIT investment in the Kenyan market? And are there specific market trends or even economic indicators that influence your decision?
Thank you very much, Ayris. Allow me to just start by reacting to Matthew's jibe. My scheme is invested in about 18% in real property, but it's also invested about 3.5, maybe 4% in REIT. So it's diversified, right? I know the underlying asset is the same, but it's diversified. And no, we are not struggling. Maybe we might just consider setting up a REIT using the property that the scheme has acquired over time. Interestingly, we've invested in the Econ REIT. And besides, you can't blame us. There are not too many of them in the market, are there? Okay, good. Now I can go to the question that I've been asked, which is, what are some of the considerations that the scheme would make in investing in a REIT? So, just like any other investment, a level of regulation gives trustees some level of comfort. The trustees in the room, does that make sense? Yep. Yes, some level of regulations go a long way. So the REIT Regulation Markets Act, I think, is a good step. It provides for a number of factors. One is on distribution. The second one is on the corporate governance structures, the level of transparency. Those things generally will assist the trustees to be able to monitor the investment and gives them a level of comfort in terms of what is happening. Secondly, when I first listened to Raghav pitch on the Econ REIT a couple of years ago, one of the things that helped in convincing myself and the team was they had identified a niche area, a specialized area, and it looked to me like there was a lot of scope for growth and for scaling up within that space. And it was interesting to listen this morning that while specialization is a good thing, I think there's also room to consider diversifying within different sectors, and I'll come to that as my last comment. Third aspect that we want to run away, we want to be invested because of the stability that real estate brings in the cyclical movements in the market. So real estate does bring in quite a level of stability. But you don't want to be involved in the construction risk and the development and then the management. So one of the options, therefore, is to still be in the underlying asset, which is property, which gives you that stability, but through the approach of a REIT. Of course, to any trustee, returns are a key consideration. Any day, you're always looking at what would give the most optimum returns, while also managing the issue. While also managing the issue of risk. And then finally, on the factors to consider, one of them is the liquidity of the asset. The fact that I can go into the secondary market and be able to trade it as a unit, I think that is one of the considerations, so that depending on the journey of the scheme and the profile of the members, you are able to get in and get out at appropriate points. To answer the second part of your question, what do I see as possible trends in the investment journey in REITs? I think we've had a very good example of Econ trailblazing in student accommodation as a specialized area. I think Fahari was more generalist. It's in different sectors. But what remains to be seen is perhaps a few more people venture out into spaces which I think are virgin and which have opportunities. Spaces. I think warehousing remains largely untapped. Data centers remain largely untapped. Transport hubs, I think they remain potentially an area that can grow into. Young adult homes, so that as you transition from student accommodation, you can transition into a young adult home. Hospitality, I think, even with the challenges, remains evergreen amongst other things. Lastly, is in Kenya, we had a major shift where business has now devolved back to the counties and moved away from the central in the cities. And with devolution, I think there's a real opportunity for REITs to grow and diversify into the counties across the country. Thank you very much.
Thank you. That's interesting. Some of those same trends that you pointed out for are on par for the U.S. I mean, industrial data centers, boom, boom, boom. So good to hear. All righty. So I want to transition just a bit. You know, we talked about some of the factors that we look at in investing and some of the investment trends. Take this question, right? How can we increase the speed of investment transactions? What are your thoughts around that?
Basically, regarding REITs.
Oh, yeah, absolutely.
Yeah. No, I think what you're doing right is part of it. I think in terms of regulation, the regulator has really, I think I must commend RBA. They've been very proactive in being supportive of the development of market in Kenya, and adjusting the regulation to facilitate the development of REIT in Kenya. So the regulator has played, I think, a good role in catalyze the REIT. Also, in terms of investor education and awareness, I think then more and more the REIT space is demystified. The more there is investor acceptance, then it's I think and someone earlier asked about what does investment grow, and that's when it also occurred to me. You know, in the Kenyan market, I think there's no one who hasn't. In Kenya, there are very few Kenyans who haven't burnt themselves in the real estate market. Just a couple of weeks ago, there was a huge uproar about some very nice housing that people built on land that had been acquired just after the airport. And over REIT is the whole structure around a REIT, and including the regulation, helps you to sleep at night. It's you have a much lower chance of finding yourself with a fraudulent piece of land that you're owning when that property was acquired via a REIT. So continually selling these investment merits of REIT and continuously engaging the regulator speed up investment transactions in this space.
I love it. Anyone else have any other thoughts around how to speed up investment opportunities?
I may add, especially given that there's the aspect of, on one hand, there's the property and people to offtake. I think pension funds are viewed a lot as the off-takers. So if the developers or the issuers are able to show the pension funds how they manage the risk and give them very detailed due diligence reports and allow them to do a lot of evaluation, then you'll find that there is a match of supply and the demand. So, yeah.
We also need to build capacity in the intermediary space.
Yes.
Find that they're very advisors when it comes to REIT transactions. So if the capacity of the transaction advisor REIT space, then that will also help speed up those investment transactions.
I love that. I love that. And also the point that you raised, mystify this basically entire industry. It's still, now I'm in it. You know, it's like REIT is like its own little special thing. You know, and out and it's like it's far away and like it's more complex than any other form of, not necessarily so, you know. So that education piece is definitely important. Lydia, can you talk about?
Can I add? We were having a conversation there with Matthew and Raghav, and one of the concerns was the total cost of setting up a trust. I think it remains prohibitively high, so that you have fairly significant amount of property for it to then make sense to structure it as a REIT. Increasingly, if we can crack that aspect of the costs of setup, then we might just be able to get more people to stop owning their property as the real estate and utilize that ownership.
You know, first, what is a retail investor in this current REIT investment climate?
Well, I think when you look at the numbers themselves, retail investors in REITs account for 0.005% of all the investments done. So the way to do it and what we've seen is that, number one, you never list a REIT from day one because you are hammered by the fundamentals that are very different to what the REIT is. And that's typically, if you look at South African REITs and globally REITs, they're trading at a discount to NAV. Because when your interest rates are going up, and that's what your retail investor will look at, right? And when those dynamics are changing, they'll hammer you. And so the way we've seen is that the best way to get the retail investor to come in is we must speak English and Swahili and not REIT. That's the first thing we need to do.
Facts.
We need to speak English and Swahili and not REIT.
That's right.
Because you're going to aggregate money from a retail investor. You're talking about gearing ratios. You're talking about NAV. You're talking about unit price. You're talking about, you know, things that, you know, NOI, right? So that guy doesn't understand all of that. He's just going to ask you, so if I invest in this REIT at 20 shillings, what do I expect at the end? I'm going to get my cash back in terms of a dividend, yes. And what will be the value of my unit at the end? It's very simple. And we've paid because our retail product, you know, since we exited from during the period when the regulatory sandbox of the CMA, for a whole year, we only aggregated 100 million. And we did that in an aggregated vehicle. And so that's why structurally the US is able to aggregate that much capital into REITs, because they took an aggregated vehicle perspective. And what does this simply mean? We do not have adequate financial advisors today who are educated enough to go and sit with Matthew and his joining a firm and say, let's build a financial plan for you that will also include all these other assets, and we can give you indirect exposure in real estate. So we must build that knowledge down there first for the retail investor. Number two, get them out of direct investment into the capital markets. Create vehicles. The threshold has been lowered from 5 million to 100,000, but it's still way above what the other retail investor would be able to invest in. 75% of Kenya's population is below the age of 75. 75% of that working population earns below $1,000. Then even if you drop that to 100,000 of investments, that's someone's salary. They're not going to be able to come in. So when you unitize it and put it at 20 shillings, 25 shillings, everybody, and I don't know why we all choose 20 shillings as a starting point, but you allow them to aggregate in a vehicle, that vehicle invests in the REITs. Therefore, you can create the element of diversification, get into Acorn, get into Fahari, get into somewhere else, because that guy doesn't want single exposure. So you must be able to speak his language.
That's right.
Here we are speaking institutional language to the retail investor. So when we look forward, as I handing back to you, is that retail investors will account over time, next 20, 30 years, 30% of all investments in REITs if we get it right, because that means you don't have to struggle with your equity injections, and that's something we must look forward to. So RAK needs to build not a REIT toolkit for institutions on how to start a REIT, but a retail toolkit where a single page investor can understand in simple language how they can get into this space.
I love that so much. Thank you for bringing that up. It was funny, I was speaking with Davina yesterday, my new best friend, and she's like, we're REITs, and I'm no expert in REITs. I'm just now in the industry. And so the way I was explaining it to her, she regurgitated it back in such an amazing, simple, and so it made me feel good that maybe I hadn't gotten too jargony or too REIT-y with her, because she immediately understood the concept. And I can't say that enough. I think so often in these rooms, we can speak to one another, like we're speaking to each other at such a certain level, and then we go outside the room and we're trying to talk to people, we're just going over their heads. And so when we talk about demystifying or even getting people to understand the importance or the opportunities here, it's okay to bring it down and just speak it at a level that is common language, everyday digestible, that allows for people to see where they can insert themselves and actually benefit from it. So thank you for raising that. Then you know you're going to go there. Good stuff. Are there any questions in the audience? I know you're hungry, but we do have 3 good solid minutes.
There's a question over there.
They're coming, sir.
Yeah, thank you again. I think mine I think is more of a comment. Can you talk a little bit about the aggregation vehicles? And is that similar to what Britam was doing? Something like, for example, if you want to take a new trust for about 250,000, they allow you to build it up over 6 months, 1 year.
So what an aggregation vehicle would do is that it would, because retail investors would be able to put in money every single day, 1,000, 2,000 shillings, 50,000 and things like that. So the vehicle becomes a holding pot, like a fund. So it aggregates money for multiple retail investors. Once it hits before, like for in our case, like 3 million shillings or 5 million shillings, then it goes and buys units into a REIT. It buys those units, comes and distributes to each individual in proportion to what they've invested. So everybody gets that distribution, because that retail space, that market was locked and capped at 5 million. So the aggregation vehicles would be like your VUCA. I think what is quite common here would be your like a money market fund, where that aggregates money at a smaller scale and then invests in these REITs, giving them exposure. So that's the only way you are able also to educate these people at a micro scale in terms of what you're investing in, why the unit price has gone up, what this dividend or this declaration of profit means to them. So that's the only way you're able to do that. So, yeah.
I got a question.
Yes, sir.
Thank you, Ayris. I think this is quite a nice forum. And as the CEO of the exchange, I'm happy to see this audience today. I can count, how many REITs are these? For the next CEO. Yes. Now, My question is on the regulations. One of the biggest inhibitors we hear in Kenya is that regulations are too onerous, and over regulation is inhibiting growth of REITs. Maybe from your experience in Nareit, are you seeing a similar trend? What are the numbers you're looking at? What is regulation a big inhibitor?
Oh, that's a great question. In a large part, so I talked a bit about what we do from an investor education standpoint, but really the second, I don't know which one we do more of, is our engagement with policymakers or investors. And so we do a lot of education, a lot of advocacy, a lot of engagement with our congressional members, and now we're even starting to identify different legislators at certain state levels where we may have, what's the word I want to use? I don't want to say threats, but maybe there may be some views that are not as positive or maybe on the border around REITs, like Hawaii is an example. Maryland's another state in which we're looking at. I think from a regulation standpoint, it's not the complexity so much as it could be related to some of the changes that we'll see with parties and the direction and the values and perceptions of different members once they're elected. So I was speaking earlier around how with the work related to ESG and even DEI, it's becoming extremely political, extremely polarizing to the point where we have some people feeling fearful to be public around that work, or even being fearful or very uncertain in which direction to go. So it's not, I wouldn't say at least that it's a regulatory burden, although REITs, right, we understand have an extreme amount of regulation oversight that maybe other types of commercial real estate does not have. But one of the things that we try to do is be very proactive and making sure that we're constantly working with our elected officials to show them the benefits and the value of REITs for the country, and then for their jurisdictions that they represent. All right, so I've been given the cutoff.
No, I know.
But you know what? All right, this is
Okay,
the honcho table.
he already stood up.
No.
One more. Sorry.
Yeah, thank you very much, and happy to see all this audience listening on issues rates. My question was to Kevin. You talked about setup costs that are relatively high in Kenya, and perhaps maybe over time you can narrow down to what can be done about those costs from a regulatory perspective, so that we know practically what is it that we can do, because we need to maintain that professionalism. We shouldn't lose that. Just understanding. So how can we cut on setup costs so that we can encourage more issuances and uptake within the market?
All right. Thank you very much, Agoti, for the question. Let me just illustrate using an example. So yesterday, I think we all read in the papers, UAP Towers was put in the market by UAP. We all know UAP Towers in Upper Hill, going at a nice selling price of 5.5 billion shillings. The CEO for NSC just counted us in the room. What number did you get? All right. So if we are about 150 in the room, and we are all thinking that this is a good asset, what do we need in order to own a piece of that UAP tower? What do we need? First, we would need to set up a REIT. The first person we'll need is a sponsor or a promoter of the REIT. So let's have Jeff as the sponsor for the REIT. Number two, we would need a manager who will go into the property and manage the day-to-day transactions of the property. We will need a financial advisor. That's where Lydia comes in. Cooperative Bank has done that. So we'll need several advisors. Steve was here. You will need a legal advisor, a tax consultant, a financial. So you need a number of. Basically, you need a team, a consortium of people to help you set it up. Then there are the regulatory approvals through the capital markets and any other the regulator who touches on the setup of the REITs aspect. Then What else will we need in order to have this REIT complete? A lot of investor education, a lot of it, because all of us in this room may not be at the same level, and so we'll need a lot of investor education in order for us to be at the same page, so that I know that the million shillings I put in and Matthew's 10 million how will it be paid at the end of the day? A number of factors have to still be put in place. What is my point? My point is, when you look at the total cost of setting up a REIT today, I think that's one of the reasons or the prohibiting factors why many of them have not been set up. Perhaps it comes second to the low level of knowledge on the setup and the need to upscale the skills available within the market in order to make it a more easily affordable aspect to structure. And also because it's still new, I think there are still very few people, as someone said, it's the same people who are in the first REIT, who are also in the second REIT, who are in the third REIT, and therefore they can command a certain price for their services. Mm-hmm. If this becomes deepened, then we will have a lot more service providers, and that variety will give you a choice as far as the cost of this many consultants. I don't have a bullet answer, but I think it's a number of factors which all coming together will result in lowering the cost of establishing the REIT. Thank you. I don't know if you want to.
I was going to say one more thing I would add with that, and it certainly right. It looks different everywhere, but I think this is where, as RAK continues to evolve and grow, they can also help to provide some support. So I know tomorrow they're going to be rolling out their toolkit, and can't wait to hear what that's all about in those different modules. But it's almost like the blueprint or a checklist or a template, right? If we know that we need certain specialties or expertise in establishing a REIT, if we know that there's a certain kind of, you need to do A before you do B, before you do C, being able to create something that folks can go to and see immediately without having to try to figure it out. I know so often for many of us who are new going into spaces, we spend so much time, we lose so much time, we lose so much momentum because we're trying to figure it out. And so when we have organizations and associations that can kind of create that blueprint for us, it's very helpful. And so for us, I mean, again, I'm like, why don't we have that for REITs? But I want to put something in place, but we've literally done that for other types of initiatives for our members, where they're looking to now launch a new initiative around their DEI or how they recruit more diverse population. Like, we're literally building blueprints and templates so that they don't have to figure it out. And we help identify industry partners, community partners, university partners that they can go to that we've kind of vetted. And so to your point, but you have to have, first and foremost, that pool of providers to even tap into. But I think as the industry grows, as RAK continues to grow, those are some ways that they can help as well.